When I sit down and have one-on-one conversations with folks, I like to start with a question, something like this. What do you want your money doing for you? What do you want your money doing for you? Because where you put your money makes it behave and act differently, makes it do different things. A savings account is different from a hedge fund. I mean, that's pretty obvious, right? But most people never stop to ask themselves, what do they truly want? So, guys, what do you want your money doing for you? Think about that for a minute. In fact, write some things down if you can. What are some of the characteristics and attributes that you want your money doing for you? So, I've got a little list here that might spur some thoughts, some ideas. But what about this? Just give yourself a checklist here. And if you jotted this down, I mean, seriously, this could save you a ton of pain over your life. So, financially speaking, what do you want your money doing for you? Just a yes or a no to each of these. So, for example, do you want your money to be safe? Is your money safe? Can you lose that money? Are there penalties to access your money? What about liquidity? Are you able to get access to cash if you need it for any reason at all without a bunch of promises, credit checks, background checks, and all that? And what about leverage? Can we use this money to create the most amount of wealth with the least amount of capital? And what about tax free access to the money? Is it available income tax free anytime I want, including retirement when taxes are likely to be higher? Some folks will say taxes are going to be lower in the future, but I mean, just take a look at the tax rates, take a look at where we're headed as a country. And then what about privacy? Do you want your money private or do you want it exposed? I want my money private. Do you know what about protection? Is your money protected? What if you had somebody slip and fall on your property? Do you want to make sure that your money, your family's money is safe, right? From anybody that might try to sue you. And then what about collateral? Is this the type of money that you can use as collateral? Are there going to be guarantees? Are you going to grow your money guaranteed? What about tax advantages? Does this thing grow tax deferred every year? I mean, that'd be really cool. Savings accounts don't do that. And ultimately, what about transferring it on to the next generation? How can you give this to the next generation without leaving a big tip to the IRS and Uncle Sam? So that's my short list. Some folks, they start asking these questions and they kind of feel like they're trying to deal with something illegal. But I promise you, we're just having a fun thought experiment here. I mean, can we even have these thoughts? Or is this only for people who are money overlords that are allowed to think these thoughts? No, I think we can think these thoughts and we can all have these thoughts. And I'm here to say you can think differently. You're allowed to, for sure. So this is just kind of that same list of questions just put up in a spreadsheet form. So most Americans will put their money in an IRA, 401k. You can see them at the top there, brokerage accounts, their home, CDs and savings, annuities, and real estate. And I bet if we did a poll of 95% of the net worth of people who watch this video would be in these different assets. Now I'm going to show you the answers to these questions, okay, with, is there risk involved? Are guarantees offered, penalties? So here we go. And if it's bad, you're going to see a red answer. And if it's good, you'll see the green answer. So for example, CDs and bank savings accounts are not at risk. You can't lose money, so that's green. But look at all the red on the screen here. It's a ton of red. So most people are putting money in things that are against their best interest. In terms of money being protected from predators, all of it's exposed to creditor risk, lawsuits, bankruptcy. And your answers probably look like something on the right side here, right? This is what you want your money to do for you. And yet we're putting our money in things that are totally against what we want our money doing for us. When I saw this for the first time, it melted my brain. I said, I got to find out where I can put my money, so it's acting the way that I want it to. so I don't have to go working as a slave, for the rest of my life. So the question is, does anything like this actually exist? Anything like this on the right side of the screen actually exist? And the answer is yes. Something like this does actually exist. So what is it? Again, I have to tell you, in my financial journey, I did not dig into money with a preconceived notion of what I thought it should be. Like I just needed to have a way to save for my future, for my family, in a way that was ethical and efficient. And when I finally stumbled across this strategy, it was almost too good to be true. But I can tell you now, after a decade of utilizing this strategy and working with clients, it's been more than true. It's been, it's working. It's working for me. It's working for my clients, and it's among the multiple tools. We're a full financial firm, but this is among the tools that I feel like needs to be shared with individuals and business owners. So what is it? High cash value, dividend paying whole life insurance, otherwise known as bank on yourself. So, the more I studied this particular tool, the more I couldn't turn away from how unique and mostly forgotten it is as a financial vehicle. It's been around for centuries. I think most people don't realize what it can accomplish. So, let's take a moment and just let me walk through this with you. So, first and foremost, I got to say this is unlike traditional whole life insurance. It's certainly different than what Dave Ramsey and Susie Orman talk about. So, first and foremost, it's categorically different in several ways. So, first, we are lowering the expenses and the commissions by 50 to 70%, which, first and foremost, the big complaint a lot of these radio infotainers like Dave Ramsey talk about is that this is a very expensive insurance policy. And I would say, well, what's more expensive, this or paying term insurance for a policy that never pays a claim and you just wasted all that money for 30 years? But anyway, this cuts the commissions down by 50 to 70%. We're allowing all the money you would have paid into commissions to flood directly into your asset called cash value. So cash value is different than the death benefit. So the death benefit on life insurance is kind of obvious. It's what you leave to, it's what you give to your family when you die. The cash value is what you can use while you're alive. And so what I'm saying is we're flooding that cash value part by 40 times more than that old-fashioned whole life insurance would have had. And this has an increasing death benefit as well to keep up with inflation. Now, this starts with an instant legacy. Since you were buying life insurance, instantly you create a gift to your family, way more than you can save for them anywhere else. And second, we're building up a cash value day one, month one. You have access to money. You can use liquid cash, okay? Next, it grows on a predictable, even guaranteed basis. So let me say that again, guaranteed. It grows guaranteed every single year, regardless of what the stock market's doing or the real estate market is like. We have access to the liquid cash value at any time. Even if banks stop lending, you have access to your money at any time, and it's even tax-free if we design it correctly. So it's kind of like an unlimited Roth IRA, but without all the red tape or restrictions of a Roth IRA. And then lastly, and maybe most profoundly, you can borrow against the life insurance cash value, and it continues to grow even on the capital you borrowed. So, if you have $100,000 at cash value, and let's say you need 70K for a new truck, you've got your 100 grand in your policy, you need 70 grand for a new truck. You borrow from the policy, and the policy will continue to grow and compound on the full $100,000 as if you had not touched a dime of the money. And you're driving around your new truck, so pretty cool. It's very unique in the financial universe to see something like that. Now, what about liquidity? Now, we mentioned access, so let's talk about liquidity. You can borrow the money at any time for any reason, and nobody's going to ask any questions except these two questions. How much do you want and where do you want it? So next, like I said, you continue to grow and earn money on the policy as if you had not touched the money. And you can even benefit from the policy loans that you're borrowing from. You're banking on yourself. So like I say, you can borrow 85 to 90% of your money for any reason, typically below market rates. So interest rates over 4 or 5 year period is going to be in the APR range of about 2%. Cash value will continue to earn interest as if you've never borrowed the money, giving you uninterrupted compound growth. And the loan interest goes into the general fund of the insurance company where it's paid as dividends to you and to all the policyholders. So in the event of death, that 70,000 gets pulled from the death benefit. And let's say my death benefit was $500,000. I had $100,000 in cash value. I borrowed out 70 to buy that truck. So here's what happens if I, slip on the banana peel. Right after I buy that truck, my family gets $500,000 minus $70,000. So 430 grand income tax free. Remember my cash value? Only had 30 grand left in there. My family gets the truck too. Pretty cool, right? So why work with me? I'm among a select group of only 200 financial professionals in the country who have met the rigorous training requirements to be a bank on yourself professional. You don't you don't want to end up with some other advisor who just Googled this strategy yesterday. We talked about how this is using a custom form of whole life insurance. But there are so many other people out there. There are 400,000 life insurance agents in the United States. And not many of them, in fact, almost none of them know anything about what I just spent the last little bit of time talking about. You want to work with the right company. You want to work with the right agent. You want to make sure that the policy is designed properly and gives you a non-direct loan feature. For just for just one example, out of 25 or 30 different features that we use to build these policies correctly, to ensure that you're not just waking up 5 years from now realizing that you made a huge mistake in which company you worked with or which agent designed this policy for you. So you want to make sure whether you work with me or someone else, I'll be okay either way. But what you want to make sure of is that you're sitting down with a bank on yourself professional, a true bank on yourself certified professional who can help make sure you're getting the policy that you hope to get, when you heard about this thing. So if you don't get your questions answered, if you don't, you read all the books and you still have questions, or you read this or listen to this and you've got questions, reach out to me. I will put my calendar in the comments and look forward to hearing from you.